Good afternoon, everyone. This is Steven Salindor here, and I'm going to do this video showing you guys what I look for when trading in the Forex market. And honestly, everything that I discuss, you can use trading any market, whether it's Forex, S&P 500, futures, whatever it is that you want to trade. You can use these strategies and, on how I review and analyze the market for any market. All right. Now, I'm going to start from the beginning. I'm going to use this pair because I'm actually already in it. As you can see, this is a live account, so everything is real. I like to be very transparent when I'm trading. I don't like to sugarcoat nothing. I want to make this as easy and simple as possible, all right? Erase everything for you. Literally everything. Moving averages, Fibonacci extensions, everything, the whole shebang. All right. We're going to start from the beginning, the very, very beginning. All right. Now, actually, let me change this right here. Show you time frames. Actually, view, toolbars, customize. And this is not it. Toolbars, time frames. All right. As you can see here, charts, time frames. There we go. All right. Usually, when trading, you have about 9 time frames. All right. You have the 1 minute, the 5 minute, the 15 minute, the 30 minute, the 1 hour, 4 hour, daily, weekly, and monthly. All right. So that's 9 time frames. As you can already see, I only actually keep 4 time frames, which is the 4 hour, the daily, the weekly, the monthly. Now I like to look at the time frames as a book. All right. The 1 minute, meaning that every candlestick after 1 minute, a new one is formed. All right. The 5 minute chart, same thing. After every 5 minutes, a new candle is formed. And then the 15 minute, and then so on and so forth, all the way to the monthly. So I'm on the monthly. This is the highest time frame. So that means it takes a month for each candlestick to form. Okay? Now, the reason why I only have 4 time frames here and not everything is because I only focus on the majors. All right? Now, as a trader and as beginners, a lot of you guys are new to trading. A lot of people, they like to focus on, the 1 minute time frame, the 5 minute, 15 minute, and nothing wrong with that, but it causes a lot of trouble for a lot of traders. And the reason being is you're not looking at the overall picture of the market, right? It's like being lost and you only have part of the map. Entire map, so you understand where you're going, right? So the time frames is like a map. The 1 minute, like I said, it's a map. It's like a book. The 1 minute being like one word in a book. The 5 minute being like a sentence in the book. All the way to the monthly, which is the entire book. You want to understand the entire book. So the first things that I like to do is I like to go to the monthly. I like to look at the entire book. All right. Now, judging by the monthly time frame, I can already see basically the highs and lows of the current monthly time frame. So when I work my way down to the weekly, the daily, the 4 hour, the 1 hour, 30 minutes, so on and so forth, overall pictures. So there's no surprises when the market goes on a big uptrend or a big downtrend, right? A lot of people, because they only trade off of the smaller time frames, which is not one of the major time frames, it's a minor time frame. It doesn't tell you the whole book. A lot of people, they get lost and confused when they were in a buy and then all suddenly market price drops on a sell, or when they were in a sell and market price all of a sudden goes on an uptrend. You want to look at the overall book. So that means the overall structure of the market. Now here, I'm currently trading USD Chef. All right. Now it's one of the currency pairs. If you look left, you guys should have downloaded your MT4s. You'll notice Market Watch here. These are where all the currencies can be paired. You can trade pretty much all these pairs. All right. Depending on what broker you're with, they'll have over like 50 plus pairs you can trade. Now I'm going to tell you, you don't need to trade every single pair. You can literally make your millions off of one pair, thousands off of one pair. All right. Some of you guys already know. You're in the groups with us, and you see that. You see students are taking a $50 account and flipping it into $1,000, $2,000. All right. That's remarkable, and that's not because people like that are trading 50 different currencies. They're not in every single currency. They find one or two, a few, understand the structure of the market, understand the entire story the market is trying to tell, and then they just stick to that pair and let it play out. One of the common problems and why a lot of traders fail in trading, not just Forex, but trading period, is because they want to trade everything. It's like a gambler, right? Goes to a casino, and instead of focusing on one thing at one game, he wants to play everything. He wants to throw his money at everything. So he gets himself in trouble. And like the saying goes, the house always wins, because he's trying to, play craps. He's trying to play the slots. He's trying to play poker. He's trying to play blackjack. Doing too much, right? You can actually only play one game in the casino. If you know what you're doing, execute properly, you can come out ahead. That's how you beat the house. But the house knows that most people, because they don't have a strategy, they don't have a system, they just come in and they think they're going to just take on everything and just, walk out a millionaire. It doesn't work like that. So today I'm just going to concentrate on this currency pair, and I'm going to show you how exactly I mark it up, what I'm looking for, why I'm looking for it, and why I expect market price to, go the way it does. All right. So here I'm on the monthly time frame. All right. Now, one of the things that I like to do is I like to zoom in where current price is, and then I like to find lows of that time frame, right? So a low would be up down here, right? A high would be all the way up here. Okay. So again, this is the monthly time frame. This takes months to move. So if you trade off the monthly time frame, understand something. You're going to be in it for a very, 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 very long time. All right. That means each candlestick takes a month to finish. So if you get in for a buy or a sell today, tomorrow, you can't expect results in 1 minute, 1 hour, 1 day, 1 week. It's going to take a whole month before it starts to get moving. All right. So I very, very rarely trade off the monthly. I'm starting to. It takes a lot of discipline, extreme discipline and patience to trade off the monthly. But I promise you this: if you can start trading off the monthly time frame, start catching waves, entire moves off the monthly time frame, you will seriously become a millionaire, a multi-millionaire, because this is the highest time frame you can trade off of. That means it produces the most amount of pips. All right, it produces the most amount of pips. So this pair that I'm in a buy right now, and I'm expecting to come all the way up here, this is going to be a nice over 700 pip move. But wait, if you notice, and I tell this to everybody, when you're in a trade and you want to know how long it's going to take, all you have to look left and see how long did it take for price to get to where it's currently at. So as you can see here, this is from the high, right? From this current high. So this is 1 month, 2 month, 3 month, 4 month, 5 month, 6 months, 7 month, 8 month. Took about 8 months to get down here, right? So you can pretty much expect around the same amount of time for it to get back up here. All right. So again, this is not going to happen in 1 day, 2 days, 3 days. So that means based off the smaller time frames on the weekly, the daily, the 4-hour, the price is just going to fluctuate up and down, up and down, up and down, up and down until it makes its way all the way up to here. All right. Now, like I said, when looking at the higher time frames, you want to pretty much mark up your highs and lows. Now, one of the common things that a lot of traders complain about is, these wicks, right? Now you see these candlesticks. Candlesticks, there's different types of way you can view the market. Candlesticks being one of them. Now, candlesticks, a number of things factor. All right, you have time. That means market price moves based off of time, volume, and price itself. And then you have news. All right, so all those things factor when trading candlesticks. All right, if you want to change candlesticks, you can change it to a line chart. Right, you can change it to a line chart. You can change it to whatever you want, bar charts, however you want to trade. Okay, however you want to trade. Do keep in mind when trading off of candlesticks, again, you want to be careful of these wicks. These wicks right here, these long skinny things on the top and bottom, the candle itself is basically market price overextending itself. All right, the real move is inside the body of the candlestick. The body of the candlestick. So you see this right here, even though this dropped all the way down, notice how price went up. Right? So you got a lot of people who got stuck in all these cells down here. When you see these wicks, long wicks like that, that means a lot of sellers got stuck. That means right here, a lot of sellers got stuck. That means they started selling at the wrong possible time, and then market price reversed. When trading candlesticks, make sure you look at the overall body. All right, the body more so than the actual wicks itself. All right. Now, like I said, one of the few things I like to do is go on a higher time frame, preferably the monthly, weekly, daily. One of these three are going to be your baby. All right, these three are the ones you need to pay attention to the most. Okay, because like I said, it's going to tell you the overall story of where price is going. All right. And then what I do is I personally enter on the 4-hour time frame, and that's it. So I can go about my day. I'm not sitting in the chart watching candlesticks move every 1 minute, 5 minute, 15 minute. No. That's not trading. All right. You want to take a position, a good solid position, hold it, and let it play out. So right here, I have my highest high up here, my lowest low up here. As I move closer, prices, notice I start placing another line. I got a resistance. This would be considered resistance. Now, resistance is, think about the word resistance. And when price can't, is when something can't break through because there's resistance, something fighting it back. So when you see price stop or halt at a certain area, that means there's resistance. It's like if I'm dribbling a basketball, right? And I bounce it high enough to the point it hits the ceiling, right? It hits the ceiling and then it comes back down. That's because the ceiling was resistance. Support. This is support. All right. So as I'm marking this up, I got another resistance actually around here, and then I make my way down here. And then I notice I got more support around here. Now, some people like to put their support and resistance at the body of the candlestick or at the wicks. I like to do it at the wicks. If I'm trading off of candlesticks, I like to do it at the wick, because a lot of times market price likes to go back to that wick area. All right. So now I got my resistance here. I got my support here. All right. So boom. Now, if you notice, I'm basically, blocking in price. So I got price basically in an area where it's like it's trading off a high of 1.03 based off a low of all the way down to 0.8, right? So now, just a couple of lines just off of the monthly time frame, I move over. Just a couple. You don't need a lot. Just find your highest point, your lowest point, then work your way up into where current price is. So this is where current price is. And then I find my next highest point, which would be around here. And then my lowest point would be around here, where this wick is. Then I make my way down to the weekly. Now, boom. All right. Now I starting to tighten up price. Now it's like, okay, Boom. I wanna buy down here. I wanna sell off here. And if you notice, every time price came up here, it dropped. All right. Now we basically hit another area of support around here. As you can see, every time wick, extension, reversal, right here, reversal, price come up. And what happened when price got down here? It reversed. Okay. Now all that means this area is also known as support. It can also be known as an area of demand. Now, if anybody's been watching me trade, you know that I'm a big supply and demand trader. I love supply and demand. Basically, it's strong areas of buyers and sellers. That means areas where market changes drastically. It goes on either a big uptrend or a big downtrend. Now, what I like to do here is go on Insert, hit Shapes, click on Rectangle, and notice exactly where price changed around all this area right here. Come to where current price is right now, notice every time price came down here, went on a big uptrend, came down again, hit, went on a big uptrend. And now, what do you think is going to happen? Price is pretty much going to do the same thing. All right. And as you can see here, once price came on a bearish downtrend, it reversed strongly and came back up on a bullish uptrend. So when I placed my buy in, I said, this is a good area to place for a buy. I said, I'll place my buy here, and then my stop loss would be down here. All right. And my take profit is going to be up there. Now notice my stop loss is around 170, 80 pips. Okay. My take profit is over 700 pips. That's a great risk to reward ratio. Understand something. Every single time you take a trade, you want your reward 3, 4, 5, 6 times greater than what you're risking. So if you're risking $1, right? If you're risking $1 on your account, you want to know that the profit is going to be $5, $10, $15, $20. So if you happen to lose that trade and you take another great risk to reward setup just like that, you'll more than make up for your loss. You see, that's the key to a good, consistent trader, as opposed to so many people who fail on a day-to-day basis. They're taking bad risk to reward setups. They're risking way more than what the reward can be. And that's not how you trade. The beauty and what I love most about trading is that you can be a loser, a complete loser. That means majority of the trades you take, loss, 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 loss. But like I said, right here, I'm risking about 170, 80 pips. My take profit over 700, possibly 800 pips. I can lose that trade about 7 times, win it on my 8th, and still come out ahead. That's the beauty of trading. I love that. Where else can you do that? Where else can you be a loser and still come out ahead? If you take the proper risk to reward setups. Now, if you came into trading thinking you're going to win every single trade that you get in, you're crazy. It's not going to happen. I'm telling you, it's not going to happen. I don't know not one trader, not Warren Buffett, not George Soros, not nobody. Nobody wins all their trades. Everybody takes losses. I take losses. And guess what? I'm proud of it. I'm happy I take losses because it's a part of the game. You're not going to win every single trade. Please understand that. But if you take the right risk to reward setup, you will always come out ahead, guaranteed. It's probability. There's no way that you can take that many trades and not come out ahead with the proper risk to reward, with right money management. There's no way. It's mathematically impossible. So if you do your due diligence and you take the right setup, you can come out ahead. So I have the strong demand zone, so an area of buyers. So that means every time price came down here, the market, look, price shot up, price shot up, again, shot up. And even though price didn't go all the way back up until it got down here to up here, even from here to up here, that's over 400 pips. I'm risking about 100 pips for 400 pips. So I can lose this trade 3 times, win on my 4th one, cover all my losses that I took, and still come ahead. I love trading. And then the big one right here came all the way back up to kiss this top. So now we got current price on this big downtrend. What do you think is going to happen? Looking left. Look left. Every time you enter the market, look left. See what price has previously done. That'll give you an idea, a good indication of where price is going again. So there's a strong possibility that price can come all the way back up here. Even if it doesn't come all the way back here, let's say it stopped right here, right? Because the next big resistance would be up here. I can still catch from where my buy position is. 400 pips. Over 400 pips. That's why I tell people all the time, count the pips, not the money. Your hardest battle in trading is not going to be winning trades, making money. It's going to be controlling your greed, controlling your emotions. Can you withstand the storm? And in reality, most traders cannot withstand the storm. They get too antsy. They got to take profit now. They got to take cash now because all they see is money right now. Instead of understanding how the system works in its entirety, by you understanding how this whole thing works in its entirety, you'll make way more money than you could possibly even fathom. So I'm actually in a great position to profit big here, right? I'm in a great position to profit big here. And so far, what have I used? Have I done anything special? Have I used so many lines that you guys can't see clearly? Have I put so many things on my chart that you don't know what's going on? 4 lines, a blue zone area, and already I'm telling you where price is going. Just looking at the structure, you know I'm not lying. Every time price touched this area, it shot up. It shot up. And look, you see my buy order in there. It's already placed. That I'm down right now. I don't care. Because I know in the next couple of weeks, by the end of this month, all the way up here. If not even more. So what is it for me to just wait? Trading is about discipline, about being patient. We live in a world where everything's instant gratification. You want to buy something, you go get it right now. You want food, you go get it right now. You want a taxi, it comes to you in the form of Uber, Lyft, whatever, right now. Trading doesn't work like that. Trading is based on your fears, your emotions. And the market, the industry, they know that. They prey on that. Like casinos do on gamblers. They know they're gonna over leverage. They know they're gonna do more than they're supposed to. This is a zero sums game. And just like the casino, for every winner, there's a loser. So you want to make sure that you understand what's going on before you even consider hitting that new order and placing a buy or a sell. Right? So now I've looked at the higher time frame. This is off the weekly. Perfect. I got a better idea of where price is. I got my support down here. I got my resistance up here. No crazy lines. And based off just looking left, that's mean you need to turn your eyes, your neck, Look left. Look what previous price structure did. There's a very, very good chance price is going to do it again. Look left, and you'll get a better idea. So now what do? I work my way down to a smaller time frame, the daily. That's the last of the three majors. The three majors is the daily, the weekly, and the monthly. I come up. Now I start drawing trend lines. Right? I want to start drawing trend lines. Is basically exactly how it sounds. It's a line that follows a trend. So this would be considered a trend line. Why? Because price is going on an uptrend, and every time it came back to touch the line, it reversed and went back on an uptrend until it finally broke. So a trend line is considered valid when it has one or two more bounces. Actually, two or more bounces, can't just have one, two or more bounces. So we have multiple bounces up here, and then price finally dropped. Right? Same thing happened when it went on this downtrend. So every time price came up, it dropped. Every time it came up, drop, came up, drop, came up, drop, and then it finally broke. So I'm going to draw a trend line from this high all the way down. All the way down. Boom. So right now, price is in a current downtrend. I'm looking for a price to break through this trend line to continue the uptrend because it's coming off a strong area of buyers. And now I'm looking for that reversal. On Friday, it looked like, after making that down, it's starting to reverse. Right? So this week, we could possibly get our reversal. And we can start beginning, price can start beginning on this uptrend. All right? So one of the things I like to do is I like to draw trend lines on the market. So before I even get in for a buy or a sell, I like to see if price is going to actually break that trend line, just like it did here. So once price broke through here, then I can get in for my sell around here. Once price broke through this trend line here, then I can get in for my buy here. Right? So now I've already placed my buy because I knew price was going to, after I saw this rejection, I said, okay, price is going to come down around here somewhere. Didn't surpass the low. And now it should try breaking through this trend line to continue the uptrend. Simple. That's it. Nothing crazy. And based off what price did over here, what's the highest point? We can see price coming all the way to the top. So that will be my take profit. So even though I can take profit around here for 170 pips, up here for 500 pips, I'm planning on holding this pretty much for the rest of the year to hold it out for a 700 pip move. Perfect. Simple trading. Nothing difficult here. The hardest part of trading is controlling your emotions. All right? So let me show you again on another pair. We got UJ. Perfect. Actually mentioned this to you guys if you're paying in the chats, paying attention in chats. I've been looking for a buy on UJ. Why? Now, based off this weekly, we got our high around here, got our low around here. Go down to the daily. We got a low around here. We got a high of around here. Now, as you can see, look left. This is an area of buyers. Notice why? Look at this big uptrend price went on. Look at this big uptrend price went on. So guess what? Because this was formerly new, there's a good strong possibility price will go on this uptrend. Right? So based off of Friday, as you can see, price reversed. Nice reversal up here, hit this low. And now, looking at this trend line down here, I'm expecting for price to break and continue this uptrend all the way back up to around 114, 115 range. This is a nice 500 pip move. You see, I'm going to risk about 100 pips, 140 pips. You can see it right there, 1463. So you get rid of the fourth decimal, so that's actually 146 pips. And my take profit is going to be over 500 pips. So, you know, put that in layman terms. Let's say I put a standard on this. I'm risking $1,463. Profit of $5,853. I'll take that. I can lose that trade 3 times, win on my 4th, 5th one, come out ahead. I'll take that. That's a great risk to reward setup. Simple. So what I want you guys to work on is structure of the market. Looking at it in its entirety, not just on a small time frame, just looking for a quick buy, quick sell. You want to catch a whole move. We caught this entire downtrend. We caught this entire uptrend. We caught it back down. We caught it back up, down. What do you think is going to happen? Price is going to go up. All I got to do is look left. Every time I look left, price went up. Price went up. There's a very good chance price is going to go up. So that's what you're looking for. GJ, same thing here. Right here. Now, yes, this would be a resistance all the way up here, but I'm going to come down here. Why? Because this is where price turned, went on a big downtrend. Turn, went on a downtrend. As you can see here, it's turning, going on a downtrend. And I'm going to put a support here. Why am I putting a support here and not here? I can put one over here and I can put one over here. But this is where price turned. So before price can get down here, it has to surpass here. So now going on, looking on the daily, we caught this entire downtrend. We caught this uptrend. We caught this downtrend. And as you guys know, we're catching this downtrend as we speak. And I expect price probably pull back up somewhere around here and then come back down and hit this low. So before a true uptrend would begin, it was going to have to touch this low, 139. All right, simple trading, nothing difficult. So you're looking on the higher time frames. You're looking for your highs and lows. You're placing your trend lines. Trend line, if it's going on a downtrend, you're going to start at the highest point and drag it all the way to the lowest point. If you're working on an uptrend, you're going to take it from the lowest point and drag it all the way to the highest point. See, this is the lowest, this is the highest. Same thing here. Lowest point right here, highest point up there. And now we're having price go on a downtrend now, right there. So unless it breaks this trend line here, this is still considered a sell. All right. So this is a quick introduction into how I mark up charts. This is what I want you guys working on, practicing on. I want you to mark up as many charts as possible. Get in the habit, right? It's like an artist. You got to keep perfecting your craft. You got to keep at it every single day, like an athlete who's shooting a basketball every single day, a soccer player who's playing football every single day. You know, all require practice, 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 okay? So once you guys get through this part, I'm going to follow up with you, see where you're at, and then I'm going to cut another video for you guys going over more things into the market, what to look for, how to analyze, when to trade, where to place your stop loss, so on and so forth. But for right now, I want you guys to get in the habit of just marking up your charts. All right? Thank you. You guys have a great day.